Hey guys, good morning. What's going on? It is a crazy world, lots of stuff happening, and who better to clear up all of this craziness than yours truly and this guy, Tim Knox with Revolved Realty, Stephen Allen, area manager of Calibur Home Loans. I wanted to get you on here really quick. I know you're super duper busy, but it's only 8:37, and I am getting all kinds of calls and texts. I guess the Fed has decided to drop interest rates down to practically nothing. And so everybody, Stephen, is wondering, what does that mean for my home mortgage and for that sort of thing? So tell me, you're my expert. What is going on in the world?
It's funny, yesterday when the news broke, I happened to have my phone. It was on my side. I didn't have it with me at that moment, so I wasn't actually actively looking at the notifications. But when I happened to pick my phone up, I noticed something's going on. And I think I had close to 30 missed calls and text notifications and messages coming in. And it was just everyone is wondering the same exact thing. What is this going to do for them? How does it affect locked rates? I think the biggest thing that people need to realize is that with the way that the feds work, the Fed interest rate, when they drop that Fed rate, that does not have a direct impact on your mortgage rate.
Say so that if you're again, borrowing, because that's where a lot of the confusion is.
Sure. So the Fed rate is not what a mortgage rate is based off of. What that will affect, however, is credit cards. If you have credit cards, the interest rate for borrowing money like that. If you have a home equity line of credit. Now, those are going to be directly affected by the Fed rate change. Buying a car is going to be directly affected. Those type of things that you see on a day-to-day basis, personal loans, borrowing money in the form of non-mortgage debt is going to be affected by this. However, with your mortgages, it's kind of a double-edged sword, because while they're not directly affected by the change, you are going to see movement. And it's likely with the Feds changing the rates, we're seeing a slide right now in the markets for opening this morning. That's going to have an effect on it. When interest rates come out, yes, you will likely see the interest rates open at a lower number than what they closed at. How that's going to sustain throughout the day, I don't know. To be honest with you, we are in uncharted waters.
Right.
We've never seen the type of action that we're seeing right now, both in society and both in the way that the financial markets are moving. It's just a very unique time that we're in.
Yeah. Well, interest rates are already, I mean, at a really all-time, well, I don't know if it's all-time, but a long-time low, right? Where are they at?
You're looking at 30-year rates right now down in the threes. And that's something that, it sounds crazy, but we even saw for a short period of time, 30-year rates were down into the upper twos. And, that really happened when the markets were just falling fast and the rates were responding in the same way. What you see now is you see more of a leveling out. The way that the mortgage-backed securities work and the way that the markets actually respond to what the mortgage rates do, it's all different than what most people can understand on a quick explanation. But the way that those are moving right now do indicate that rates are going to kind of likely respond in a like fashion to the market at the opening. I don't know what's going to happen beyond that, because these mortgage-backed securities and how those are going to drive that interest rate change, we could likely see rates leveling back out around the 3.5 range, or even a little bit higher in some cases.
Yeah, and I think that's the thing that everybody's confused about, because my clients are calling me asking me, well, what is that going to do?
0% mortgage.
Yeah, can we lock in at 0%? Well, I'm buying houses left and right if that's the case. So the thing that people need to understand is, when the Fed cuts rates, it is typically going to affect consumer goods like cars, credit cards, personal loans. It does not necessarily translate to the mortgage industry. The mortgage industry moves a little slower. So I can't call you up and go, hey, the rates are at 0, Stephen, lock me in.
Lock me in. No, but you would not be surprised how many people do feel that way. I received probably 3 people ask me if their rate was going to be 0% now. I had a couple reach out to me that we've been trying to do a refinance with, and with them, they asked the same question: are we going to be at a 0% interest rate?
Right.
And the facts are, it's not ever going to happen. You're not going to see that, and I think that unfortunately, you do see a lot of people in our business, and I won't call out names, but They know who they are. You are capitalizing on this by going online and you're posting this stuff about now's the time to buy. Now's the time to buy. Rates have taken an all-time low. The Fed's cut the rate. Buy now.
Right.
All of these things are these catch lines people are using. And while they're not wrong to a certain extent, now is a great time to buy. Mm-hmm. No one is disputing that. It's not because the Feds have cut the rate, and it's not giving anybody a 0% interest rate. And I think that's the type of hysteria that people are kind of feeding the beast, because they see this, and then the clients and the consumers are reacting with, hey, can I get a 0%, or is my rate going to be 0.25%?
Right.
I don't ever see that happening. And I think that's something that we just need to do a better job of educating our people, mm-hmm. and educating our realtors, our clients, and letting them know, yes, we are in very low rate territory, but it's not likely that you're going to see a 0% interest rate.
Well, and lenders have to make money, right?
Lenders have to make money.
They're in the business of making money.
They do, but at the same time, I think with the way that this it affects it in so many different ways. You're going to see things happen in this market 6 months from now that change the whole way that we look at it. Lenders that are here today may not be here then, because what you have to look at is this refinance boom that we are having, and we are having a refinance boom. There are repercussions to that. Mm-hmm. There are things that lenders behind the scenes know about that do cost money. And, because of that, you see a lot of interest rates not reacting and going as low as we would think that they would go, because they don't want to have these mass payoffs.
Right.
These mass payoffs and refinances, that can be costly for lenders.
Yeah. All right. Well, I've got you, and I'm going to let you go here in just a second because I know you're slammed. You did a post on Facebook this morning about everything going on with this coronavirus undoubtedly is going to affect the time to fund and close.
Right.
So where we are in the world now, if everybody goes into quarantine and they shut down the courthouses, title companies, that sort of thing, there's going to be a slide of closing. Talk a little bit really quickly about the possible delays in funding and closing from the virus.
It's unknown. Everything at this point is pure speculation. It's really unknown what we're going to be looking at. But I do know I have a person who is a title abstractor who has stated to us that if you have a home or a property, specifically a property that your home sits on, that had no change of title no change of title prior to 1991, there's likely going to be no impact. So builders, there's not going to be an impact. A lot of homes, there's not going to be an impact. But prior to 91, if there was a change in title, those cannot be found online. So from what I'm being told, we are going to be seeing some delays on properties that have a change of title before 1991, which is nearly all of Huntsville. I don't know how that's going to impact us. I do know we will see delays in the return of title work. Right now, the normal time that I have set for our turn time is about 7 days that we expect to get title back. We could be looking at 2 to 3 weeks. Mm-hmm. And in some cases, just a title not being able to be issued for a property. That's going to be the direct impact from the title. On the appraiser side of things, it is a delay right now because, let's be honest, there's a lot of people that don't want to go in other people's homes for health reasons. They may be slammed and personnel might be low on their end. It's going to have an impact. How? I don't quite know exactly yet, but let me go even a step further. Government agencies are starting telework. I know Alabama announced today that they're doing work from home things. I don't know if Step Up, which is a very popular program with the Alabama Housing and Finance Authority, I don't know yet if Step Up is going to be directly affected. Yeah. Will they be able to issue approvals? We hope so. But the truth is, I don't know yet. And so we need to be mindful of these things, and we need to be educating our clients, educating our buyers that there are some real things that are happening that could change the progression of what their loan process is going to look like.
Right. I know I'm talking to a client this morning who is making an offer on a property, and he's not going to be here for a couple of months. He's relocating. And he's trying to play the time here. Like, okay, if I do make the offer and we ask for a 60-day close, in reality, given what's going on in the world, it may be beyond that. So I know a lot of people are trying to look in their crystal ball and see what's going on. But the bottom line is we don't know what's going to happen.
We don't.
The bottom line is don't shoot your realtor or your lender.
Stay calm.
This is a human business. We've got people involved, and there may
And Tim,
be
let me
delays.
just say
We just
this
have to accept it.
on behalf of all lenders out there. Don't. I know realtors are wanting to jump on lenders if they see a delay on this. I get it. But please understand that every lender wants to get this done, and they are working tirelessly. We are working hours right now, same hours I'm sure you're putting in, almost nearly 24-hour around-the-clock type hours.
Yeah.
We want to get this done for you. We are doing everything in our power to get this done for you. But please understand that we are trying to adapt as quickly as possible to some of these changes, to some of these things that we don't yet know about. And we're going to do everything in our power to continue on as normal.
All right. So moral to this video is, just because the Fed cuts rates to nothing, to zero, does not mean it's going to affect your mortgage.
Amen.
If you are in process of buying, getting funding, be patient, because there may be delays.
You got it.
All right. Good deal. Hey, Stephen, if someone wants to get in touch with you and add to your burden,
hey, I'm always available for you. We're here right now. We're actually working, trying to get things done. And you can get in touch with me by phone's the best way, 256-724-2500. And I'd love to be available for you.
All right, Stephen. Hey, I appreciate you taking the time out. Now go work on my refi, please.
There you go. Absolutely.
All right, buddy. Talk to you soon.
You bet.